The night is heavy with panic. It's Buenos Aires, December 2001. Banks have locked their doors. People are shouting in the streets. Maria clutches her young daughter and whispers, "We have no money left." The television glows with a news alert. The IMF has approved new measures. She doesn't understand what measures means, but she knows what hunger feels like. That night, a continent's decades of struggle returned in one brutal echo: the promises, the loans, and the devastating price to pay. It all began decades earlier. In the 1970s, Latin America was booming. Oil money, easy credit, dreams of becoming modern global powers. Governments borrowed billions to build highways, industries, and glittering cities. The world applauded. Until the storm came. Interest rates in the United States skyrocketed. Suddenly, the loans that were once manageable became impossible burdens. Exports collapsed. In 1982, Mexico sent shockwaves through the global financial system by announcing it could no longer pay its debts. Panic spread like wildfire. Brazil, Argentina, Chile, one by one, they teetered on the brink of collapse. This is when the International Monetary Fund, the IMF, stepped in. It offered loans, a lifeline. But this lifeline came with heavy conditions. Cut government spending, privatize state-owned companies, open markets to foreign competition, and remove subsidies on essentials like food and fuel. Stabilize your economies, they said. What followed was not stabilization. It was what historians now call the lost decade. Instead of recovery, entire economies were hollowed out. Factories closed their doors. Wages plummeted. Inflation devoured savings, turning life's work into worthless paper. Governments, desperate to regain credibility with international lenders, obeyed the IMF's prescriptions. But the streets told a different story. In São Paulo, workers marched in protest. In Lima, mothers traded food stamps for a loaf of bread. In Bolivia, the government implemented what was called shock therapy. With a single decree, it privatized state companies overnight. Inflation did drop, which the IMF hailed as a success. But for thousands of miners and their families, it was a catastrophe. Entire towns disappeared. Behind every statistic was a name, a face, a family struggling with hunger. Then came the 1990s, and with them, a new wave of presidents promising recovery. They embraced the free market with renewed vigor. Argentina became the model student. It pegged its currency, the peso, directly to the US dollar. Inflation fell, and foreign money poured in. For a short time, life seemed stable. Shopping malls sprouted, imported cars filled the streets, and a sense of optimism filled the headlines. But it was an illusion built on borrowed time. By 2001, that illusion shattered. Argentina's debt had exploded. Unemployment hit a staggering 20%. The IMF ordered more cuts. Public sector salaries were slashed, pensions were frozen, and social aid was reduced. The government obeyed. The people did not. The streets erupted. Protesters banged pots and pans, shouting a phrase that would echo across the continent. "Que se vayan todos." They all must go. The economy collapsed. Banks froze people's life savings, and the president famously fled the presidential palace in a helicopter. Just days before the final crash, the IMF suspended its support. Later, it would admit to errors of judgment. But for Maria and millions like her, that confession meant nothing. This wasn't just Argentina's story. History rhymed across the region. In Ecuador in 1999, IMF demanded tax hikes and subsidy cuts, led to economic collapse and the death of its currency. The country was forced to adopt the US dollar. In Bolivia, protests over the IMF-backed privatization of natural gas turned deadly. In Jamaica, the price of bread soared after subsidies were lifted. The pattern was brutally consistent: borrow, collapse, get a rescue package, and endure crippling austerity. Every deal carried a promise of reform and a hidden cost. The loans came with strings so tight they strangled the very people they were meant to help. Governments slashed education and healthcare. Hospitals ran out of medicine. Teachers went unpaid. The poor bore the weight of a stability they never felt. But this dark story has some unexpected twists. First, not every IMF program failed. In Chile, some reforms did help stabilize inflation and attract investment. Why? Because the Chileans negotiated on their own terms. The same happened in Mexico after its 1994 crisis. Success depended not on the IMF alone, but on local control. When countries owned their reforms, results improved. When they simply obeyed, disaster often followed. The second twist is that the IMF sometimes tried to save what was already lost. It treated deep, structural insolvency like a short-term cash flow problem, pumping more loans into holes that couldn't be filled. In the 1980s, this mistake buried nations in even deeper debt. What was meant as a rescue became a cycle of dependency. And the third, most powerful twist: by the 2000s, Latin America began to fight back. Argentina, under President Nestor Kirchner, repaid its entire debt to the IMF and declared, "Never again." Brazil did the same. The region started looking for new lenders: China, regional banks, or simply relying on their own reserves. For the first time in decades, Latin America began to write its own financial script. Yet the ghosts of the past never fully vanished. In 2018, Argentina returned to the IMF for the largest loan in its history, a staggering $57 billion. The government promised reforms. The economy shrank again. Inflation soared. By 2025, Argentina had entered its 22nd IMF program. The headlines changed, but the painful pattern did not. So why does this keep happening? It's easy to paint the IMF as a villain, but the truth is more complex. The IMF is a mirror. It reflects the world's power structure. Wealthy nations hold most of the voting power. Developing nations bear most of the pain. The institution is designed to protect global financial stability, not necessarily local equality. And when the numbers on a spreadsheet clash with human lives, the numbers usually win. But beneath the cold economics lies a human truth. People adapt. They resist. In every crisis, Latin Americans invented new forms of survival: barter clubs, neighborhood soup kitchens, cooperative banks, and powerful mutual aid networks. When the system failed them, they built smaller, more compassionate systems of their own. Maria saw it happen. When her husband lost his factory job, she began baking bread to sell. Neighbors helped each other. They shared food, clothes, and even laughter in the darkest of times. She realized something the IMF's models could never calculate: resilience. The dark history of the IMF in Latin America isn't just about policy. It's about pride, betrayal, and endurance. It's about governments caught between global lenders and their own people. It's about presidents who signed deals to avoid collapse, and the citizens who paid the hidden price. And it's about the slow, painful education of a continent learning to say no. If you look closely, you see a pattern of lessons carved in pain. Lesson 1. Never trade sovereignty for short-term relief. Loans can calm markets, but they can also shackle nations for generations. Lesson 2. Reforms without social justice will always collapse. You can't balance a budget by unbalancing a society. Lesson 3. People are the real economy. You can't fix a nation by breaking its citizens. Stability built on suffering never lasts. Today, Latin America stands at a crossroads. Inflation is rising, debt is growing, and the IMF still hovers in the headlines. But the mood has changed. The people remember. They demand transparency, social protection, and local control. Economists call it policy space. Maria calls it dignity. The story doesn't end, it evolves. It shows that survival is not about obedience. Progress is not just austerity. And history, no matter how dark, always leaves behind one unbreakable thread: the will to rise again. Thank you so much for watching. If you found this story insightful, please consider liking this video and subscribing to our channel for more deep dives into the events that shape our world. We'll see you in the next one.